everyone, welcome to today outlook. On today outlook we'll be looking at gold. All right, I've been getting some messages on what I'm expecting on gold at the moment. So quickly, let's go to gold chart. All right, here on gold, this is H4. So let's look at daily. All right, so like I told us the other day on the previous video that the current candle, which was the previous candle of yesterday, it likely closed a bullish body, right? And it did. So now we have two strong rejections here, and I told us that price is likely going to drop to take out this low. Now unfortunately today we'll see price keep pushing to the upside. This indicates that this support level of 2471.25 is a very strong support level. All right, let's go to H4. Here on H4, 2507.34 was a very strong resistance level, which I told us on the previous video that the market will respect and drop, which price respected and dropped down to these points here before going to the upside. So now you see that before price breaks that point, it broke with a very huge bullish momentum candle, because without this bullish move, without this momentum, price cannot break it. So it needs a very strong momentum to break that level, and which price did. And if you watch here on the previous days, you see that this bearish candle also was a strong bearish momentum candle that broke 2507.34 when it was acting as a support. So price broke it with that momentum, then retested it and started dropping. So now this is the price also broke it with a strong momentum. Now I've been getting so many questions now, like what is the next move on gold? All right, if we look on weekly here, we'll see that the market has been making higher highs and higher lows. So let me show us. See that the market has been making higher highs, higher lows, higher highs, higher lows, higher highs. So and the level at which the market rejected, which is 2471.25, is a very strong support level. All right, so for price to break it also, it needs a strong momentum, to break 2471.25. all right. So, and we all know that this week is NFP week, and when it comes to NFP, you should be expecting a massive outcome in the market that will create volatility in the market. So don't be surprised during NFP to see this candle turn to a bearish candle. So now let's go back to H4. I want us to understand something. So now if you watch here, now you see that we have this zone here. Using the wick and body strategy, or using the wick and body strategy markings, which I've one time shared a video of it on the Telegram channel. If you are not on the Telegram channel, do it to click the link on the description to join the Telegram channel. It's one of my course videos I recorded about wick and body strategy of zone. So now you see that we have this zone here. So let's use a rectangle to mark it out. All right, so we have this zone here, and where is price likely heading to? Price currently now is heading back to this zone, but for me, looking at it now, you see that this was a range. This was a range. All right, this was a range, and what happened? Price broke out from the range, then came back and retest, then dropped. All right, now price is currently back inside the range. So what are we to be expecting now? First, we should be expecting the market to do some kind of hunt, because if you watch now, you see that here at the zone we have lots of weak rejections. Here we have lots of weak rejections here. So in that case, we are likely to see this market to push a little bit higher to take out what the wicks of this what candlesticks at this zone. It's likely to do what? To push higher to take out the wicks of these candlesticks at this zone before anything dropping. So all what you have to do now is sit on our hands on gold currently now, because as it stands now, looking at it now, gold is in a box. Let me just make it like this. It's in a range. All right, gold is currently in a range from here to this point. You see that gold is currently in a range, and it has been making this kind of movement inside the range, hit here, then drop to this point, come back, keep on making this move inside this range. Now currently it's coming back, so might likely see something like this inside it, then drop back again, or possibly come down to this point. All right, or possibly come down to this point, or we are likely to see it do something like that also, and maybe take it out, continue to the upside, or take it out and drop back. So what makes you a good trader is you being able to adjust to the current market condition, to adjust to the market. Because I always said, when you want to trade a certain pair, do not trade the pair, or let me say, do not trade in a direction because, or let me say, do not trade in a direction you want the market to go. Rather, trade in the direction at which the market is likely to go. You want the market to buy, but technically the market is selling and you keep on buying it. All right, and you keep on buying because you want the market to buy, selling because you want the market to sell. Okay, so looking at this now, gold is in the range, so, and I know that it will be ranging until the day of LFP. Well, I know some intraday traders have already made money from this push up. All right, they have made money from this push up. Now let's look at 1 hour. Looking at 1 hour now, currently even the push up also to the zone, I see that the bulls are kind of getting exhausted as well. They're kind of getting exhausted also to push price to the upside. Let's look at 30 minutes. 30 minutes also is giving us a signal that they are exhausted. 50 minutes, they are getting exhausted as well. So all what we have to do now is we'll sit on our hands and wait for it. So now the question is, where are we likely going to buy if we are to buy this market? Where are we going to sell if we are to sell this market? Now I'll be giving us my point of area of interest, because yesterday someone chatted me up and said that I did not give my area of interest on most of the outlook I made. So it was only AUD USD, and this good I gave area of interest of 2507.34. Then the other pairs I did not give an area of interest. We are looking for buying and also selling. So with that, it will help them also to make an entry. So now I'll be giving you my point of interest. So now looking at it, price is what is in between this zone, like in between these two levels, here and here. So the zone and this level, price is currently in between both of them. So now trading here is risky unless you want to take risk. Which risk are you going to take? That is the question of the day. Now you trying to say, okay, let me buy to the zone, then I look for sell, might be risky, because you might enter a buy to the zone. What will happen? The market will drop. Now you might say, okay, let me sell down to this point. By so doing, market might likely do what? Push to the upside. So that is why it's very risky to trade in between zone. I could remember when I gave out one of my free course video, buy zone and sell zone, and I told us when price is in between buy zone and major zone, when price is in between buy zone and major zone, or sell zone and major zone, it's very risky to trade that pair. It's very risky to trade that market. It's very, very risky, because you want to buy and the market will push down to the major zone, and you want to sell and market will push upward to the major zone. So it's better you wait for price to come to the major zone, then you will buy or sell, or you wait for the price to come up on the buy zone or sell zone, then you can enter. What I'm trying to show you here now is this. You see that you wait for price to come here, then you sell, or you wait for price to come here, then you will sell. I don't know if you are getting me. So now let's say, for example, this is our major zone and this is our sell zone. All right, so price is in between major zone and sell zone. So if you want to sell now, price might likely push up to the major zone and you will make loss. All right, then you want to buy to the major zone, price will likely drop out to the sell zone, you also make loss. So for safer entry, you are advised to do what? To wait for price to come to the major zone, then you sell, or you wait for price to break out from the sell zone, then you will sell. So in that case, what I'm trying to let you know is this: for you to wait for price to come below 250734. But sometimes you can take a risk entry and it plays out, because looking at it now, we have this minor level here. All right, so we have this minor level here, which I can possibly do what? Take an entry. Yes, I can possibly take an entry because of this minor level. Then I will use a tighter stop loss, around, let's say 25 to 22 or 20, thereabouts, then selling it down to this point. All right, so now looking at it now, it's kind of what? Reversing, because I told us, remember, I told us on 30 minutes the bullish move is getting exhausted, and I moved down to 15 minutes. I also tell us that the bullish move is getting exhausted. So currently now we are seeing the kind of candlestick formation that is happening here. So we'll see how it plays out. And also we have ADP news today, which will likely either push it upper side or continue dropping it to the downside. So if you must take this trade to be on a safer side, it's either you wait for it to come to the zone or you wait for it to break out down 2507.34. Then it will be a safer entry for you to do what? To sell. Alright guys, so this is what I have for you on gold. This is what I have for you on gold. Like I told us that I am bearish on gold this week, but when you are bearish for the week doesn't mean that the market will just keep on dropping from Monday to Friday. Yeah, it happens sometimes. There are some months that the market will keep on dropping each day, every day till the end of the week, but market doesn't move in a straight line. So you are likely to see pullbacks when the market is moving. It's a trending market, so there will be higher highs and higher lows. If it's a bearish market, there will be lower highs and lower lows. If it's a bullish market, you'll be seeing higher highs and higher lows when the market is trending. So when the market is making higher high, all right, going up, then make higher low, is a retracement or pullback for you to get an opportunity to do what? To join the market. So anytime you hear someone say, I'm expecting this market to buy throughout the week or to buy this week, buying this week doesn't mean that the market will not make pullback or retracement. All right, so now currently I'll be expecting this gold to drop from this point. Any further up push will be at that zone, so I'll be expecting it to drop from this point here, then keep on dropping to the downside. Like I said, don't be surprised to see weekly candle as it stands now. Don't be surprised to see it close a bearish body. Don't be surprised to see it close bearish before the close of the week. But remember, we have where we are looking at now, the zone and 2507, for us to do what? To be on a safer side if we are to trade it. If you are to sell it, at the zone will be what? A safer point for you to sell, or below 2507. So now trading here currently now is you taking a risk entry. I don't know, most of us who don't know what we mean by risk entry. Risk entry is, let's say for example, like you're on this chart now, price is, let's say, few pips away or few pips away or close to your area of interest, and you start seeing a signal of price not going to get to that point. All right, you start seeing a signal that price is not going to get to that point, then you say okay, you risk entry. And when you are taking a risk entry, you don't use your normal lot. What you use, you use a lower lot. If you are using 00, let's say 0.10, you are likely to use 0.05, 0.06, like you reduce your lot for that risk entry. So currently now we'll see how good will react here, because we'll have the news by let's say in 2 hours time. So in 2 hours time we'll see how it will play out here. But remember, mark out 2507.34 on your chart, then mark out this zone. These two horizontal lines are what make up this zone. 2526 and 2531 are what make up this zone. So you can mark this out on your chart so as to be able to, for you not to miss out. So as when the market approach anyone, like I stated, if price come to this zone, then you look for entry to sell, or if price come below 2507, then you look for entry also to sell. So mark it out on your chart, then keep watch. Some persons, there was a previous video I made on, that was AUD USD. Someone commented if he can use a pending order on the AUD USD pair. All right, so what my reply was, when you get to that point, give you a sell signal, then you can enter, because you might keep a pending order and price get to that point, did not give a sell signal to sell, and either first of all take you out before dropping, or trigger your this thing pending order and continue what going against you. So that is why most times I advise waiting. When you see that sell signal, you enter manually and sell. But this zone is a very strong zone, so price will always respect that zone. For any reason price will break that zone is only maybe when we have fundamental news, a high impact news, when price is currently close to that point, or high impact news that will just take price pass through it. If there is no high impact news, normally technically price will respect that zone because it's a very strong zone, so it will need the help of the fundamental news to gather the momentum and the volatility needed to break that zone, because it's a very strong level. If you look here on H4, you see it's a very strong level. You see the rejection and the reaction of the candlesticks there, so it's a very strong level. So for price to break this zone here, it will need a strong momentum of volatility in the market to break it. So guys, so let's see how it plays out. Like I said, taking risk entry at this point. All right, so we'll see how it plays out by the end of the day. So I will see you guys on the next video. And also please, if you have not subscribed to this channel, please do well to subscribe and comment what you would like me to add on my video, or a kind of pair that you always, or you want me to add to the outlook. Because if you watch, most of the outlook I'm doing are basically on USD pairs. So if there is any pair you have as your favorite that you would like me to be, put it on my outlooks, okay, just comment it, then I will also add it. And also, if you have any question, you can use the comment section to ask a question. Please do well to share the link with others so as they will benefit, because I believe you have learned something from this video. Currently now, there's something you have learned from this video. So imagine when someone you introduce to this channel also watch videos like this, the person also learn something from it. Okay guys, so thank you for watching, thank you for sharing. For those who are sharing the link also, if you are not sharing, please do well to share with others. And thank you also for the likes and the new subscribers. Thank you, and you are welcome for this channel. You will not regret subscribing to this channel, honestly. So I will see you guys on the next video.